Welcome back to episode 5 of The Core, where we're planting the seeds to your financial success. My name is Colten Hibbs with Education Credit Union, and I'm here with Brittnie Aguirre.
Yes, thank you, Colten. Again, I'm Brittnie Aguirre. I'm the mortgage manager here at ECU. I'm excited to be here to talk about all things home loans.
Yeah, so how long have you been with ECU?
I've been with ECU over 2 years, about 2.5 years. But I've been in mortgage for about 7.
That's fantastic. So that's your job here at ECU is all things mortgage.
Yes.
And what's the best part about your job?
Honestly, the culture. I love the people, which is kind of ironic because mortgage in general is such a fun place to work, but it's also a love-hate relationship just because mortgage is tough sometimes. Anyone in the business knows, but I love just being able to help people, but I love working for a company that backs that as well.
Yes.
Yeah.
Okay. I love to hear it. Nice plug.
Yes.
All right. So, well, really, now I will say as financial health coordinator and going out and doing financial education presentations, there's do you recognize with it, obviously you've been working in mortgage for a number of years. So within my audiences, I see a sort of general anxiety of like, will I be able to own a home?
Right.
Or do you get that in your, okay. So what about so should people be concerned? Like, will I ever be able to own a home? Like,
yeah. I mean, if you think about it, a mortgage is probably the biggest transaction you're ever going to make. If it's not the biggest, it's one of the biggest. And so I can say even from personal experience, I bought a home last year. And I mean, even working in the business, I had anxiety. Like, can I actually do this? And so it's natural, it's normal, but that's why find a lender that will walk with you through the process. Find a real estate agent that will walk with you and partner with you, and then make the transaction as smooth as possible. And we'll tell you, like, yes, you can do this, or no, you can't.
That is so, I love that. That's a wonderful introduction.
Yes.
So finding a realtor, if somebody's driving down the street and they see, oh, that's a cool house. Oh, and it's for sale. Do they just call the number and get started? What does that look like?
Yes, they can. I kind of have my hesitations when I tell people to do this. Now, if you're just driving by, you're really not in the market, it's not something you've thought about, but your dream home just went for, it's up for sale. What do you want to do? You want to see it, right? So I would say, yes, you can call the listing agent, which is going to be the seller's agent who's listed on the sign. Give them a call. However, they're going to ask you, do you have a pre-approval? So a lot of times it's okay to do that. There can be a lot of emotion involved, though, and that's where the anxiety can kick in, like, oh my gosh, can I do this? Can I not? Because you haven't thought of that part yet. You've already found your house, but you haven't talked to a lender. Yeah. So a lot of times I recommend, like, yes, you could do that, but go find yourself a real estate agent yourself who's going to represent you, but also find a lender who meets your values and who's going to help you determine what amounts you can get approved for. And like I said, we'll work together to help you get to the end process.
And so it's not just a realtor, it's also your lender. Yep. These aren't all the same things. Yep. And there's a seller's agent who is selling the house for somebody else. Yep. And then so you need somebody to essentially advocate for you, as well as a lender to do all the finance part.
And there's a lot that can go into that too. Like if you do end up calling that seller's agent and they actually end up representing you as well, they can do that. They can represent both sides. So it's a win-win either way. It's just trying not to get your hopes up until you kind of know
all the back end secured.
Yes, absolutely.
And so what is it? You mentioned pre-approved. What does it take to get pre-approved for a mortgage?
So good question. It's different for everybody, but the main thing that we look at, we're going to look at your credit, income, and assets. We're going to verify where are you spending your money, how much do you have to spend after your bills have come out, anything on credit that's reporting. That's called your debt to income ratio. So we take your debts towards how much you make and we determine a percentage. We also look at if you're self-employed, there's a lot of options. So I don't want to specify just one thing, but everybody's different. But again, credit, income, and assets, that's what we're going to look at. So you come in, you apply, you do the full application. We get copies of all your documentation. We run it through our underwriter, let her know kind of, hey, here's the situation. Loan officers really push for it if they really think you can do it, and she'll just verify. And then we go from there, you get a pre-approval and go on. Or if you don't, something else I think we should mention, if you don't, here at ECU, which you'll know a lot about is awesome, that if it's a no, it's a, hey, let's get you with financial counselors. Let's get you a way to do this later.
Yes.
So it's not just a, hey, no, see you later, bye, go somewhere else.
Exactly. Yeah. No, that is, when it's a no, we always try to give that yes option. That is that's my
resources.
Big deal.
Yep.
And when it comes for members kind of sort of looking for their own debt to income ratio, say if they're not sure they're ready, but they're hesitant to talk to somebody, their financial institution of choice, I know Education Credit Union, we have debt to income calculators on our website. So if you kind of know what your total income is, or if it's fairly simple calculation, you can sort of kind of figure that out for yourself to see if there's a good position for you to be in. And is there a sort of positive or a percentage that they should look at for debt to income ratio?
So again, it's going to come down to lender, product, and kind of even grant programs that we offer as to the limit of those, which I can get into the grant program here in a little bit too. I always try to say between 40 and 45% on your DTI. That's going to keep you at a really safe level of, hey, you've got a little room to push, but you're also in a
demonstrating responsibility.
Exactly. So it's actually really easy to calculate as well if anyone's interested. So all you have to do is add up all your payments that are listed on credit. You add what your new comfortable payment would be, and you divide it by your monthly income, and that's going to give you your ratio.
Exactly. And no, we're not talking groceries. We're not talking electric bill. We're talking about your credit. Yeah, who you borrowed money from.
Yes, and keep in mind school loans, if they're in deferment, give yourself a payment just to be safe, or 1% of what you owe. So just to be safe, because we have to do that on our side. So just keep that in mind as well.
Perfect. Now, all right. So we've talked about a lender, talked about getting pre-approved. What are other costs to consider? Like, I think I have enough saved up for my down payment. Like, I listened to that podcast. I listened to that guy when they came to my class. What now? What are other costs to consider?
Good question. This is something that a lot of people struggle with because they don't realize there's closing costs involved. And I was one of those people before I worked in the business. I never thought, you think, hey, it's 3.5% down or it's 5% down, and that's all you have to bring to the table. Unfortunately, that's not the case. However, again, lenders are all different. They're going to charge you different prices. Here at ECU, we charge a flat fee. It depends on the loan amount as well. It could be $950, it could be $500, and that's what we call the origination fee. That's going to be a part of your closing costs. So that piece is just because we're doing the loan for you. On top of that, you've got your appraisal, you've got your title search, recording fees. I mean, all things escrow. We have to put about 2 months aside at the beginning at closing just to start your escrow account. So all of those things are something you should consider when buying a home, because maybe 5% down is $10,000, but the rest is $6,000 to $10,000. So about $20,000 may be what you actually have to bring to closing.
There we go. All right. And so now, how long does this home buying process usually take? So we go from start, I found the thing, I have a hefty amount saved up for a down payment. Oh, and look, it might cover whatever other, like for inspections and all those other things. I think I have enough for a closing. How long? So I have all the money. How long does it take me?
Yeah, good question. So again, lender to lender is different. Here at ECU, we strive to do 30 days or less. I mean, that's just something that we've really been working on and pushing for. It also depends on if you're building a new home. Obviously, that could take months. We do start the process for you at the beginning, and then we kind of walk with you through the process. But 30 days, 45 days max is what we strive for here at ECU.
Now, why all the red tape and paperwork? It can take longer at other institutions, of course. And again, depending, are you building and all of that? So what is... Obviously, we have a lender, we have a realtor, we have inspections, we have appraisals, we have closing costs. So obviously, there's a little more than what meets the eye.
Yes.
Why all the red tape? Why all the paperwork?
Good question, too. So it feels like when you go to closing, if you've ever closed on a house, I mean, the packet's like this thick, right? So because we have to stay in compliance, so legally there are binding documents that we have to provide you, as well as us. You guys have to sign for us. Really, it's Fannie Mae guidelines that we do this, and then it's also our internal procedures that certain documents, depending on payment, servicing, it's just legally what we have to follow. Something really neat at ECU, and I think several lenders are starting to do this. We work with title companies, and we actually do electronic closings. So your packet this thick is now about this thick,
right.
And it takes 10 minutes versus an hour and a half. Yeah. So there are ways to make the process easier, but unfortunately you do have to sign documents, and that's just because it's a risky transaction. It's a big transaction.
Yeah, it's one of the largest purchases you'll ever make in your life. I would feel uncomfortable if there wasn't a lot of paperwork. I want my name and my the signature everywhere just because I proved that I did this, right?
Yep.
Now, what's the difference? There are different types of home loans. So the traditional guidance is like 20% down to avoid things like private mortgage insurance and things like that. But is that, there are other ways to get into a home. If you don't have 20% down, there are many programs. So there's conventional, there's FHA. What is the difference between these big main programs?
So you kind of mentioned it. One of the biggest differences is obviously how much you're going to have to put down, 20,000 or 20% versus, 5%, 3.5%. So 20% is always going to be more like your investment properties. Those are normally conventional. So conventional is really what I recommend. If you can do conventional, yes, you're fronting more money up front, but you're saving more money in the long run. If you're not financially stable to do that at the moment and really just need to get in a house, FHA is usually the best way to go. However, like you said, you will have that private mortgage insurance, which ups your payment. Private mortgage insurance is what covers us if you were to foreclose. If you couldn't afford your payment, that would help us. So it is a requirement since it's a government loan. So again, payment goes up. However, conventional doesn't have PMI if you put at least 20% down. You can put 10, 5% down. Even first-time homebuyers, we offer a program that's 3% down. You are still going to have PMI. So it just depends. Like I said, we really like to go in and evaluate which one fits you in that very moment. But something to keep in mind too, when you go to other lenders, they may do in-house programs that are ARMs. They may be able to get you 100% financing, which is great because it gets you into the home, the property. But then later on, is your payment going to adjust? Is it not on a fixed schedule? And so those are things. It's a wide variety of why there's differences on what types of loans are out there. But the main two, conventional and government, is just conventional. You just stay in-house with us. We don't sell it. FHA, a lot of times, is sold on the secondary market.
Right. And so you might not know who you're paying or have control over who you're paying.
And you have to call every month. You can't just go into a branch and make the payment. You actually have to call. And sometimes it can get sold and you didn't even know it. Yep. So, yeah.
And you mentioned ARMs, adjustable rate mortgages, correct? So that means rather than a fixed rate, you, based on the needs of the market or the fluctuations in the market, your payment, your mortgage could go up unexpectedly in a significant amount, correct?
Yeah, that's absolutely
And so now, does ECU have like an FHA program of some kind or like a way to help people get into a house?
Yeah, so we don't offer FHA. It's not something that we've been able to add just yet because there's a lot that goes into it. Like I said, it's a big stack of paperwork for conventional, so it's also FHA. It's something we're in the works on, but we also feel like with the abilities that we have, we're able to offer things that kind of mimic what FHA does. Guidelines and exceptions we're able to make as long as it makes sense for the member and for us. So currently no, but it's in the works. And we do offer what's called the HELP program. This is a really, really awesome program. It is hard to get somebody qualified just because there's income limits. It's really targeting low income areas, and we're able to help them get up to $20,000 in closing costs as a grant. So they actually don't have to pay it back. And so that's apart from any seller concessions you get. There's no credit limitations on that. You can have kind of a lower credit score and still be able to qualify. And that is actually through FHLB, who is our investor. Even though we don't have FHA, like I said, those get sold secondary. We will start selling secondary, but something to notate here at ECU is we keep the servicing. So even when we sell, you're still seeing our faces when you walk in the door. We get to help you.
Yeah, we still have that face-to-face contact.
Yeah.
So when we're talking about like credit score, we talked about like DTI to kind of look for, but where's your credit at whenever you're shopping for a home? What kind of credit score do we look for as ECU?
Yeah, that's a great question. So 620 is the minimum credit score for Fannie Mae. So I always try to say, hey, get 620 or above, like that's what we're looking for. However, obviously you want it higher than that if you can get there. I'll be honest, I started out with lower credit and had to work my way up too. Yeah. But that's the beauty of ECU. So a lot of times we get the files that are hard, the files that may have a 560 or 600 credit score, but there's a reason. Maybe there was a death in the family. Maybe they lost a job, COVID. We can go in and kind of get an explanation for that. And like I said, if it really makes sense for where that member is right now, where they're at, if it makes sense to help them, we can do it. Not every single file, obviously. I don't want to say, hey, we can do credit scores at 500. No. But like I said, if you've got that relationship with us and you really just need help and you need a step in the door, if it's a no, it's a not right now, let's get you with financial counselors, or, hey, you know what, I can do this, but let's start small and get you to where you want to be in the future.
Exactly. And I should always mention our financial counseling program is free. So when we refer people to financial counseling, it's not to tag on a fee or to get more money out of them. It is literally to get them in a better place so they can get to wherever it is that they want to be.
Yeah.
Brittnie, thank you so much for joining us on this episode. You've been wonderfully insightful. We also appreciate you, our audience, for joining us each time. Don't forget, you can catch us on the latest episode every other Wednesday on Spotify or YouTube. And with that, we'll see you next time on The Core.